All right. So the main topic of today with the actual T1 and T2, and we're gonna also cover this topic by going through a weekly breakdown. So we're gonna cover all the opportunities and what I saw for this week and what actually I want to expect for the upcoming week. Right, so Monday started right here. Now, on this scenario, we're gonna see basically where a T1 is. And for me, we have simply two BOSs when the second one will be a trap, but it's not simple as is. Because if we only see two break of structure, we won't find any sort of objectivity. And the worst thing that can happen when we look to T1 is just, let's say we find ourselves on a bullish market structure and every single low, we expect it to be T1. So let's say we expect this low to get taken, but in this case, it respects, it broke structure, and then again and again, what will happen is simply price respecting all of the lows when we expect the low to get taken, and that never happened, right? So how we can fix it is by giving rules and objectivity at first. So let's say that every low and every actual structural point for us must be valid. So how we can actually make it valid is by giving him a reason, building a story behind every structural point to understand his own purpose in the overall picture in the market. Now, there are two factors mainly that we'll look for a T1 to be valid. So let's say right here we have a strong low, and then we have a strong high right there. That will be our range from A to B. Let's say we have internal range liquidity being built right here. So we got both of our QMs. So what we expect for price is just price taking the internal range liquidity, logical area, and then move up to the external, right? But what happened, it just price randomly reacting from a middle of the internal range liquidity and breaking up structure again. Now, when price will form another QM, we have to ask ourselves, why this low can be protected or not? What's the main purpose of this low? Now, if you look to our range from A to B, we can see that this low, let's make it blue, don't have an actual reason to hold for us because it didn't do pretty much anything. Now, it's not important for price that will take out every single internal range liquidity for the range, but most of the time it's gonna only take the major inducement. That will be, let's say, a T1 trap or a T2 trap, basically. But let's say in this case, we all have no traps inside, so basically all internal range liquidity being built. And price just broke structure. If I have to think about the structural point, I don't have a reason to why it holds. He didn't do pretty much anything. Is just in the middle of anything and inside the range from A to B, it did pretty much anything, right? It didn't do nothing. So what we can expect is just price to take out this trap. Also, let's understand about BOSs. Right? We have a break of structure when price push away for price. So you see price coming back right after price making a break of structure. That can be also a sign of a weak break of structure. That can make it a trap. Now you can take, let's say, only a factor to build a trap. You have to tie up everything, you understand. So when you see a T1 and you have an internal range liquidity, what will happen mostly is just price making a tiny pullback that won't take, let's say, even half of the internal range liquidity. And if you think on a perspective with premium and discount, the price won't even come to an actual premium or discount area, right? So when price makes a QM, build up the major inducement, and also let's understand the liquidity. Now you expected price to take out this low also, but it didn't. And now this low should be the trap. What do they build? Are simply equal lows right there. So we have even more a reason for price to actually come in there. Right here. And now the price will take out the trap and potentially all of the internal range liquidity. Now all the traders are simply gonna look to a break of structure from the blue low right there, and they're also gonna take the short out in the market, and they're gonna all get stopped out. We can call it the first variation on my point of view, but that's the main logic that you're gonna see the T1 forming, right? The second variation, you will simply have it where you don't have internal, and that will be much more easy for your eyes to see. Because on the first one, you have to build a story because you have a lot of data. And when you find yourself in scenarios when there is a resting pretty much internal range liquidity, that will be easy for you to actually understand because you have less data and less noise to make you overthink. Because most of the mistakes are made when you overthink, not because you lack knowledge or you lack something about this strategy, but simply because you try to make the hardest thing out in the market when it should be easy and obvious to understand. Right, so right here we have our range with our internal range liquidity from A to B, and price do a little retracement and then broke a structure, and it forms another QM. Now you have to ask yourself, what did this low do inside of the range from A to B? There isn't pretty much nothing inside, so what it might do? Nothing. That's how it is, so that must be a trap for us. And now when price will make this QM, will also confirm most of the time a high time frame range that will be from this structural point to this one. And now inside this purple range, you will find internal range liquidity being built. And now when price will take it, same thing as we explained before, we got the POS for order dumps money. They will see this area to short out, and then it can go long, targeting all the external range liquidity being built, right? So that's the main logic we're gonna look for. So this week happened a lot. That's why I'm also breaking the week down. I know you'll find it so helpful seeing also my perspective. So we can do basically both. So looking from the high time frame perspective, let's move it to the daily. What we're gonna see before Monday was actually somewhere right here, I think. Yeah, before this candle, we got our range. We are coming from a high time frame PI that we can spot it on the weekly. So we got equal lows resting right here. All of these is a high time frame PI. We can even spot it better on the monthly. Now you see mitigated on the monthly time frame right here. But if we drop down lower, you will find something unmitigated. Now, I'm not gonna step on mitigation because it's a lot of, let's say, a big topic to actually go through. But when you actually feel everything, you're gonna find that this is basically your main POI, where price is reacting from. And if you don't want a POI point of view, what you can wait for is simply a QM that is made right here. Now, we were actually bearish for the most of the time, but when you have a QM, you can actually wait to expect that reaction from, right? So now price takes out liquidity and broke structure. And as you see, we didn't get pretty much any QMs instead of this high right here. So that will be our high time frame range that we are inside right now. We got two QMs right here. So one of them will get taken. And now if we have also the confluence of being on a high time frame PI, we can actually go to take longs. Now, we are right here, so let's think that before this anything happened, and we got another break of structure right here. Now, that's a low, since it's a three candle formation, that will be a strong low on a lower time frame. Build it up another low. Price came to mitigate something that we cannot see, and also take out some liquidity resting down there and broke structure. So this low should hold if on the overall we are bullish. Now, our range that can be, let's say, for the whole week can be easily spotted on this time frame. I'm not a huge fan of utilizing the three candle formation because I simply prefer utilizing QMs, but you can also do it right here since it's so pretty much clear. You have a low, WS made a high. Inside you have internal insecurity, and that's pretty much textbook, right? You have a range and you have internal insecurity right there. Now, what I will prefer the most is just to drop two time frames. So in this case, going to the 1 hour and the 4 hour to just build up my intraday range. Then in this case lasted for the overall week, right? So following my trading plan, as you all know, I need to find my range onto the 1 hour and the 4 hour time frame, right? I select always this one simply because it's going to take a day or even the whole week on the worst scenario if it's so big. So for example, like this one, and that's pretty much everything I should focus on, right? If I trade on the intraday time frames, that will be basically the 1 minute, the 5 minute, and the 15 minute. It doesn't matter my point of view on the overall daily time frame if I exit to the safe target. If I swing, that will be important. But in the overall, when we look to the high time frame, it doesn't matter if right now I anticipate this low or this high to be weak, simply because my trade will be a tiny movement, a tiny rejection that the candle will made on the daily time frame, right? So it doesn't basically matter. Now, if we move to the actual 4 hour, we can't see clearly through the QMs. I can only spot the strong low right here. So price takes out liquidity and broke structure. But let's say I drop to the 1 hour time frame, and now I can see both of my QMs and all the structure making sense since I have my low and now price takes our high. Now, you can actually take this low to advise for reversing, or you can take this low right here, or even this low right here. This will be a lot confluence based. And let's say you have a PI on the higher time frame you're coming from, you can even take a second one right here, but you need confluence and confidence to take it. So the question you should ask yourself is, how much you want to risk to actually be wrong? Obviously, the safest decision is to actually wait a protected structural point to be broken. But if you always wait for a protected structural point being broken, sometimes you will never catch a trade because that will be too far away. Like for example, we got the BOS right here. This one will be the protected structural point. And you can't wait, let's say, even multiple days to actually have a bias, right? So you require a lot of confidence to actually understand the overall market. So we got our range. If we were bullish because we have a high time frame PI, we can easily identify this high to be potentially weak right here. Now, you're not gonna have always the right bias, right? Sometimes you're gonna be confused and not have everything clear in your mind. And that's something normal. No one has any sort of magic sphere. I always say this in my calls because you're basically all traders. So there are days where you don't feel the market. And that's something you have to deal with. Don't expect us traders to just have the complete understanding of everything going. We know how to react and how to actually be smart with our thought because we also tend to overthink in some scenarios, but it's not important the actual feeling, but how we actually deal with it, right? So we have a range right here that we are pretty much inside of it. Now price takes out the internal insecurity that we confirm from the high time frame. That will be this one. This happened on Friday. Yeah, Thursday, Friday. So for us, now we should just be ready to take out the external insecurity, right? If you're smart enough, you're also gonna move your QM from here to the one from here because you have everything That makes sense for you, right? So you got the BOS, and now we are moving to the exchange liquidity. But let's say you're confused about it and you don't know what may happen inside of this range, because let's say you have too many confluences to say you that you want to go short for, let's say, some reasons and expect this low to be weak, and other point of view to just expect this high to get taken. So you find yourself on this situation. What you can do is just moving to target internal range liquidity, because right now we have two QMs, so we have a trading range, so we can take actually decisions inside of it. Let's just think that it's simply a 1 minute range. The smartest thing you will do is just take out the internal range liquidity. And we can do the same thing onto the 1 hour. That's because the market is fractal and we treat every single time frame in the same way. Let's now imagine all the two scenarios that can happen. So the first one will be the high to be taken. What will happen is simply price will go up there, right? Because now for the QM is on a logical area. It already took out internal insecurity, so there isn't pretty much something stopping him, right? Now, if you are bearish, let's make it blue, and we anticipate the low to be taken, what we will see is simply price going up, take out the internal insecurity, and then reverse. So if I don't have a bias in this situation, the smartest thing I can do is just taking the internal insecurity, right? This won't happen 100% of all the time, but it's just something we can actually use to catch some intraday setup, right? So when I'm confused about the overall bias because I have so many information, I can just do the lazy step and just target the internal insecurity, right? So on Monday, we were close to this area, right? So let's say that's the overall target and we don't know pretty much which of them will get taken. We also have to dig about the overall market structure there is. So we have this strong low, price broke structure, makes a retracement coming to mitigate something. It doesn't matter where it came right now for us. Broke structure once again, price create the inducement, and price came to mitigate this block or something unmitigated inside of it. And price broke against structure, right? Now, we need our intraday range because we're not gonna take trades inside of this time frame, right? So we're gonna drop a few time frames to actually first make us able to see the QMs, right? So I saw this strong low that take out liquidity and made WS. And now, right after Asia, we have a QM. Took out liquidity and made a breakout structure, right? So now we have a QM formed. The question we should ask ourselves is that if we have internal range liquidity being built in, right? And the answer is yes, because we have all of these lows. Now, we can't just blindly go targeting all of these lows because we have to mind where we are in the overall market structure. You have to see the liquidity as the actual fuel of the market. So if your destination is right here and you find yourself here, will it make sense to just come back where you started, move up, and then maybe reverse, or just do from here to just go up? You have to think also in fuel terms. That's how I like to do it, because price is not gonna come below there right now because his target is up here. Maybe we'll do a smaller pullback and then we'll move up. But we have to remember that price following our range cycle should take out the internal range liquidity, but it didn't, right? So I didn't catch pretty much anything inside of here that was pretty much clear. And then price came up here. Now, on every scenario you're gonna have, price is gonna give a reaction from right here because that's an obstacle, or maybe the overall PI that will make the overall price action reversing. Now, let's question ourselves about this low. right? And compare them to the other law. For me, that's a valid law, and that's also another valid law, right? Because they also take out some liquidity. They also came into premium and discount area, and they all make sense. When you think about this law being displayed, what you think? That he didn't do nothing inside. He didn't take internal and simply build it up more, right? And that for me will simply be a T1 trap. Because on every scenarios, if price want to come back, that's a trap, right? So that's why basically you could go targeting from this high at least this low, even if you don't mind where you are in the overall market structure. And then what I did is just expecting a reaction from this PI because we have everything going for us, because we have order flow, mitigation, and liquidity on our side. So we're gonna have at least a reaction down there. Now, let's say we have this PI and we anticipate from here price reacting and taking out this high. We have to question ourselves. So how did price came into this area? Is a price came pretty much straight into it. So we don't like when price comes straight because we think we need some kind of inducement, because we need QMs basically. And that's basically a teacher trap. So about the teacher, mainly what you're gonna need is a failure swing. Most of the time, you're not gonna just be able to anticipate failure swing. Don't think you can predict them on, let's say, 70-80% of scenario, because that's not how it's going to be in the reality. Because if you're going to anticipate failure swing, that means on a random bullish market structure, you're gonna also take shorts right there, anticipating the price to fail. You can gather confluences to actually anticipate price failing, and that's what actually teacher is made for, right? So let's say we have our range with internal range liquidity being built in right here. And now price to actually collect all of this liquidity has to create a bearish market structure, right? So it has to go down there. So it's going to build our bearish market structure. And for now, all the highs are going to be protected. They're going to be three candle formation, or in other words, simple QMs on the way. Now price has collected all the internal range liquidity. Let's say it also came on a high time frame POI. So for us, there isn't pretty much anything stopping it to reach the external range liquidity. But then price fails to take out this high. Now, this high obviously will be weak because we just fulfill the first part of this cycle that will be simply collecting internal range liquidity. Now price fail to take out this high. That will consequence simply the low to be weak. That's the main cause why price will take out the low and then is ready to actually fulfill the overall move. Why? Most of the time to anticipate it, you have to look inside of this price leg where you're gonna have a bullish market structure. And if you see a protected low being taken, you can expect price making a failure swing. But you have to be aware that that must simply be a T1 to form. So if you're a beginner, don't try to just anticipate failure swing, but just react with them. Question yourself, but when you do it, don't question yourself too hard, because you're just gonna end up confusing yourself, right? So that will be the first variation for me when we talk about the teacher, right? Now, the second example will be the one I use personally the most, and it's going to be the one more helpful when we talk about ping pong. So let's say we have our range, but in this scenario, we don't have any kind of internal range liquidity. So what price is going to create the most is simply inducement. So teacher will create a failure swing, failing to take out the previous high. Then in this case will be our external range liquidity. Failing to take out this high will make the low weak. And now inside our range from A to B, we have some liquidity that we can consider from selecting a PI and actually catch along, right? So that will be the use that we're gonna most likely use with the teacher, right, to catch trades. Now, how we can use it to ping pong, this thing will be more advanced, but it's something much more easier once you understand this overall purpose. Now, if we have to think statistically following my experience, to which scenario happens the most when we don't have any kind of internal range liquidity. So right here we have T2, and right here we have T1. What will happen the most is T2 on me, right? This will happen on my experience 70% of the time. And that's why I use it to actually do ping pong most likely. So how we can actually use it? Now, if you anticipate price making a failure swing, so that means that inside of this blue range, from this low to this high, we will fail to take out the red one. We can actually anticipate a short from some areas targeting the low, right? And then we can go long on the overall PI right there. That's so easy to explain, and that's how it is in the reality. Now let's try to apply it on the live chart. Now, price on this scenario needs to create some kind of inducement, right? Because also when we think about teacher, I forgot, we don't like price to approach directly our areas. We don't like to get tapped in like this, because that's what most marmory traders like. And then when they see price missing their area and giving a reaction, they'll get tapped in so easily, right? Also, this kind of inducement, when we have POIs, this can happen when you have internal and when you don't have it. But you have to tie up everything together, right? So sometimes the inducement can just be formed at the 50% of your POI, or even let's say to the 80-90%. You can't control it. You have to actually react from. And that's a skill that every profitable trader should have. So how price approach this POI is pretty much straight, right? So on every scenario possible, if price want to go bullish, what it will do is just take out the low and then break structure. Why also we have the teacher is that if you see, it's going to simply form a QM right here. So everything tie-ups perfectly. Now everything should make sense and something should click into your mind, right? So that will be for the bullish scenario. And then if price is bearish, what it will do is just drop. So on every single scenario we have in our mind, this low will get taken, right? Now, don't expect a reaction that will take out this high. The main reason is just price can be inside of a smart money trap. So basically an obstacle, because all the traders has their position inside. And if price makes a too wide movement and is not actually the time for the price, everyone will make money. And the market don't want you to make money. So that's another factor that can actually establish it. So if we jump down the 5, we can wait for a QM. Right. As you can see right here, you have your range, you have a strong high. And a strong low being made right here. Now, you can't just randomly say that you have interrange liquidity just because you see it onto the 5-minute. You have to tie up multiple point of views when you do your analysis, right? So you can't just randomly go to the lowest time frame possible and say that there is internal liquidity, because even if we drop to the seconds time frame, we're gonna see even internal liquidity being built even above him. And that's not a range full of liquidity, right? So if we go to the 5, that's basically the time frame I was. We can go start looking at the overall market structure, right? So you can catch some trades, but if you have the 5-minute point of view, you will see liquidity even above here, and that wouldn't make sense for price to just come up there, because everyone will simply make money, right? So what I used to see it clearly is just I jumped onto the 15-minute to actually have a better point of view of the overall range. Now we have 3 candle formation, and what can I see? It's just price don't have intrinsic liquidity, and at all, I must wait for some kind of inducement inside of it. Now, which one is the correct point of view, the 15-minute or the 5? That's a nice question. You can just trade what makes sense for you and what makes sense for me. It's just I have 2 different point of views, one into the 5 and one into the 15. So I need the objectivity in it, so I will personally don't take it. But if I have to select which one looks the clear one will be the 15-minute, because it reduces all the data. In this case will be very nice having middle time frames. So let's say the 10-minute will give us a lot of edge on this chart, but it's not necessarily, since I use basically all the free time frames and you don't need any kind of custom time frames to actually do your analysis. Right, so in this scenario, also we are pretty much outside our trading, since Asia is ready to begin. I won't catch any kind of trade because I have more factors telling me to just don't trade out of it. So I waited for Asia to form, and as you can see, we can also have more confluence. Price took out a protected low that made a purpose that took out some liquidity and made a high. And also inside, if price wanted to go bullish, there was liquidity resting right here. So now we have another range. Remember that you're not forced to trade any kind of range. Maybe someone will take out an actual short right there, and that's nice because you have reason to actually catch it, because you have inducement being built, and that's 100% valid. Right? But when you're actually on the live chart, you're gonna ask yourself some questions, right? And that's why I only take high probable setup. I understand why price came exactly right here. I also got it marked up when price was actually inside of here, but I didn't execute it. The main reason is because high probable setup for me are something more textbook, are something that they just click into your mind because everything makes sense. There can be more confluences or simply a more clear scenario, not for everyone, but for you. Right, so now I have something that I really like to trade. So we got the Asia that already formed, and we got our range. The low is weak following every confirmation we have, and this one will simply be a high probable setup, because on every scenario in our minds, this low will get taken. We have a QM right here, so we can simply wait another QM. Now, where price might react from is from the actual trap. Now we used to see the price will just broke straight into it, and price did it on a high time frame. But if we drop lower on certain time frame, we can even be able to catch some trades, right? So now that's all our obstacles. We have also liquidity being built, and now we should question ourselves what is going inside. So let's drop in this case to the 1 minute. Asia closed with a strong high. This will depend on the broker you see it. I check it to most of the broker, and even if you see on this time frame as equal highs, you see price making a QM, T1, take it, and that's simply mitigation. So that's all right for us. So we got our range. Let's go to the 5. You can see even better point of view. All right. So we can move up everything to this high that should hold. if we are on the right leg. That will be simply a bearish market structure because all of these highs are now protected. Price takes out structure. Now, what happened inside of this range is what we have to ask for, right? So let's go to the 1 minute. Now we got a QM right here that will confirm our range. Then we can ask ourselves if we have some kind of internal range liquidity being built in. Now, you can say that this is the internal range liquidity of the range. That's not how actually it works. If you look to the main schematic of the range, we have something like this, right? We have something with a lot of liquidity. You can just say that a random three candle formation will be the overall inter-range liquidity of the range. Because for me, even if I have all of this, that will simply be a range without inter-range liquidity, or there is inter-range liquidity right above here, but there isn't an actual reason for price to come up there, right? So price builds up, trying to reach the internal range liquidity, but it failed to take it, building what? Equal highs, right? Now price takes out structure, even made a high time frame BOS right there. We got another QM right here. We don't have internal insecurity, so price must take and build some inducement, and it did. So that will be a potential short if you, let's say, waiting to get a reaction from the overall obstacle. That will be Asia, and I will trade it, but that's how you can actually be able to catch it. Now, price came ontological area and also price swept the Asia low, so you can expect some bullish reaction. Now, here we have basically liquidity being built, and we can expect some kind of reaction because we are also in the London kill zone, right? We also have the magic minute right here. That will simply be my 8 a.m. in the scenario because we switch at the time. But if you trade with the East time frame, that will simply be something like 3 a.m. right now, right? So let's just move it back. All right. And then we have this internal liquidity being built because we see our QMs, even let's say you wait for a high time from BOS, and then you have this QM. Obviously, if you waited for this high to get taken to make you able to form your QM, you will have less time to actually even be able to think about this entry, right? You will then catch it right there because for you, that's simply internal range liquidity being built. Now, what I took was simply this main OB that is also, as you can see, the closest PI to the liquidity. You can even refine it, but let's say in this scenario, you take it from above every kind of internal insecurity you saw. So let's say you took it from these three candle formation, you'll never get that then, right? And that's something you have to deal with it, right? Price won't always come to your area, even if that makes sense, because we have to remember that all of this, that's basically a POI. So price can either react here or even can react from the trap and give us a reaction. That's not a perfect market. That's a ugly market for us, right? So we should be able to adapt ourselves to all of these scenarios. So that will be basically my short. I'm fine with having a bigger stop loss by getting tapped in. And also if you compare the risk redeem out of there, we will have a 105. So that's pretty much enough. I have 3.5 on my SL, and that's pretty much perfect. You can also go to scaling entries, and that's also what we're gonna do. Right, so price was close to the take profit. We made a BOS. Now same logic applies as before. If your destination is right here, will make sense for price to just push all the way up to where you started and then drop down again. The actual answer to this question is no. So we might take the risk to take another strong high to actually take some trades. So we see price taking a three candle formation, block structure, and price makes a QM right there. Right here. Now we have to ask ourselves, do we have any kind of internal range liquidity being built inside? The answer is actually no. So we must wait for the inducement. That will be basically a T2. So price built up a high. And now that's enough for us to actually execute a trade on the closest PI to it. Now we have all of this, we can refine it to this imbalance field per section, or even by taking the breaker, that will be on you. I personally took it from the imbalance field per section since it was very close to my PI, to my actual liquidity. SL for a 2.5, and that will be a pretty nice 104, right? So that's also how you can stack trades, and you don't have to overthink when you think about this strategy, because you can actually resume it to basically this whole cycle. You find your range, and now you have to simply ask yourself two questions. Does it have internal range liquidity? That will be yes, or it don't have internal range liquidity. If that yes, you're gonna select the closest PI to the liquidity and just wait to get your external take. If you don't have internal range liquidity, what you can wait is simple inducement. Once you have the inducement, you can just place your trade and go to the external range liquidity. That's how easy it is. I know that can seem so much simple, but that's how I apply every single day in the market. On the high time frame perspective, let's say the 4-hour one, price made a failure swing. You could anticipate it until price breaks this low right there, right? Because that was protected and that didn't make sense for us if you think we are bullish, right? So price right now took the low, and what can we think? Like, what's the main logic behind this market structure? Now, your mind will think that we are on the 4-hour time frame, and this big structure is wide, let's say 20 to 30 pips. So you think it's huge, but let's dissociate our view from the time frame and let's just think we are on the 1-minute time frame. So that's basically the 1-minute structure right here, right? If you're on the 1 minute, you will say that this breaker structure doesn't make sense because at least, let's say price should take out this low or even move few pips even below it, right? To make actual sense. There is no point for price to just stop right here. It doesn't make an actual sense. So if you find yourself onto the 1 minute, will you execute a short on this PI even if you have some kind of inducement? Your answer would be obviously no, because you don't have an actual reason. So what you can do is simply price going up higher, and that simply can be what we consider a fake BOS. Because when you question yourself, what did this low do? It's pretty much nothing, right? Didn't came into nothing, just made this fake breaker structure. So now the high is weak, and this simply builded more equal high, so liquidity for us. Now, could you anticipate this high? For my point of view, you couldn't. You can simply react. And that's why you should be able to adapt yourself all the time you look to the chart. Not think about anticipating everything. Because on most of scenarios, let's say you did the same thing right here and you just blindly think, oh, that might simply be a failure swing. That means we also take the short from here, thinking might do a failure swing, and also right here. And you end up on more losses, but your mind will make you think there is something that you're missing. Maybe there is, but for what I see, it's just a trap being built right there, right? So now I made the fake BOS, and now we can easily start looking to take out this high after a QM is formed. So price formed a QM, and now we have a strong low that makes a weak high right there. Now price made it right here, the Asia. Asia closed with, yeah, we got a high. I think we have, yeah, we got a T1 because Asia made the QM, so that's a high. This broke structure. Then when you ask yourself about all of these two lows, what they made is simply building up more liquidity because inside of the price leg, they don't have a purpose, right? Here we can find, let's say, a low that will be the strong low for our trading range. And right here we have a strong high. We don't have intrinsic liquidity. So what I will expect the most is simply a teacher to form. So in other words, a failure swing, but price takes out structure. Building now the inducement when price will make a QM right there. Do we have it? Of course, because we have a 3 candle formation. So that will mean until the 1 minute, we will have a QM right here. And now if you use the logic I explained, you may able to catch a short ending with a long, right? Now, which one is the closest PI to this liquidity? I use this actual QM, untested QM, or in other words, 3 candle formation. I took the 50% above, so that will be this candle being a breaker. We can check it even onto the 1 minute. You see price made a high, it broke structure. So that's a valid breaker block because it failed, it got violated. So if you move up onto the 50-minute, also that will be the closest PI we can find. On the 50-minute, that's simply an imbalance field price section because we have 1, 2, and 3, and inside of them we have a gap, and that will be the imbalance field price section. So we have a lot of confluences to actually take some short, some actual long inside of it, right? Now, price didn't came, but it took out the internal range equity. So don't think that price needs POIs. POIs are simply made for us to actually take trades. We think with liquidity, not POIs, because you can actually take trades on the level of the liquidity. And yeah, you can do it, but you have worse risk redeem out of the traders that we use POIs basically, right? So when price is right here, and let's say makes a QM, as it did, you can be able to actually catch some trades. Right, that will be a confluence. Now, let's think you don't have the PI. You have a strong high being made right here. Exactly. And now you simply have to wait for a QM, right? Will you take this high to be broken to form your QM, or you will wait for this high? You will obviously wait for this high. Why? Because it's simply much more higher than the last one. Because for your mind, this can simply be some kind of T1 and price just might be ready to reverse and tap your entry, right? That's confidence. That's why you have to tie up everything. Now, we have all of them being broken, but you have to ask yourself this question. Will you take, let's say, a long if price made a failure swing right here and came into this PI, or you will miss it? That's on you. This will depend on your overall understanding and how much you want to risk or to just being wrong, right? That's something you have to deal with personally because we all have different scenarios that looks high probable for us. I collected as much data for more than a year with this strategy by selecting all the best setup that can give you high probable entries. That's why I only take those kind of entries because I see that the ranges, I have a lot of experience with ranges, so I know what will work the best and the most is going to make me, let's say, more confident by taking it, right? These are a lot important factors you have to deal to actually catch high probable trades, right? So what I waited for is just this high because I want to see price just going through it. I don't want to risk to just be induced onto these random areas because for us now it's simple to see where price is reacting from, but where you actually live on this area, you will question yourself about this area being a trap or the actual area where price is going to give the reaction. You will have to think about it a lot, right? Now we got our QM because price took out the structure and also swept this liquidity. And we have a range, A to B, right? Where price is reacting from is from a trap because it's going to be the target. So this untested QM or PY is going to simply give us a reaction from. So if price is going to get a reaction, and remember that is going to trap traders out, he can't push this lower because again, it's going to make way in all the traders entering short right there. So we can use our logic. We got a QM being formed that this will validate and give us the confidence to actually understand that this low is protected because it will then make a strong high right there. So this low is too far away for price to come and even this one, right? That's a three candle formation. So that's a structural point and that's a QM. So that's a range. End of term, the high will simply be weak. So you might take the risk to actually execute on this, say, this overall area. But first we have to understand our range type. We have to switch between timeframes, and in this case, you will need seconds to actually be more accurate. It's not something needed, so we can pretty much say that we don't have internal range liquidity. You might say that this candle on a lower time frame, that's a three candle formation on a smart money trough, but we don't cover them in the course. That will be something more advanced. But for me, what I see is just a range without internal range liquidity inside. So what I should wait for is just a teacher to form. So just some kind of inducement. So price drop down lower, making the QM retrace. And that can be even enough to me to be the inducement, right? So price drop down and the closest area can find in this overall block right here, right? And that's where you can actually execute your trade. Now price took a structure building up even more inducement. That will be something more noticeable on the lower time frame. And that will be basically your trade. Now, if you're gonna target the safe target, that's I want a 3, I wouldn't take it personally because it's not something, let's say, a lot high probable, right? Because you have also to take the risk of this area to hold, right? So you can actually go and take some high time frame target that, for example, that can be your overall high just above it, right? And that can be a nice trade for you. Now price broke structure. And now, as you understand, this low should hold and also all of these two lows should hold. And then price makes another high As you can see, it's so easy when you tie up the ranges with the market structure because basically you can't overthink anymore. You have two QMs, or let's say three candle formation, and that's basically what you have. You can't actually escape from it. Now price made also QM right there. I'm just taking the most obvious one. You can also use this one that in the lower time frame. We all know that's a three candle formation right here. But me personally, I will take this one because I don't want to fall into a trap. Price reacting from an obstacle. And right now we have our range from here to here. Now, do we have internal range liquidity? The actual answer is yes, because we have these three candle formation being built. So we can find some reason to take some actual longs from. Now, the closest PI, as you can see, is just this area right there, where you want to catch an actual long from. Now, on my point of view, I know someone catch it. I see simply price coming down straight. So I will personally wait it for some kind of inducement being made. I know it's something that can be low probable, but that's what I see if I have to catch a high probable setup. That's why I don't actually take trades on my challenge every single day because I wait basically for the picture perfect scenarios, and where they only them, I execute. I don't have the fear of, let's say, catching all of these trades, even if I understand the actual logic behind, but I want only to catch for my simple edge the best scenarios possible to have a high win rate edge, right? So for me, we got a QM. I was anticipating the actual low to be weak. Now we all have to apply our simple and smart routine to approach ranges. Do we have internal insecurity? You can't actually overthink. That's a yes or a no. You can't question it. It's just you have three candle formation, equal highs or equal lows inside, yes or no. Now the question, the actual answer of that question is going to be yes, because you have that three candle formation. What is the closest PI to that liquidity? We have this hidden base that also is lining up with this breaker block, right? We can refine it to the unmitigated part, and that lines up with this imbalance field price action. So you can take it in both ways. You have a reason to go short. I anticipated this short because what makes sense following my edge is that this low to be weak. But remember, anything is picture perfect and anything will go just all the time following your plans. So then the next morning we have Asia that made a strong low, and the main confirms that I know that price isn't interested anymore to take out this low is just because you broke structure, not from this high, but from the major one. And that will make something click into my mind, understand that this low might hold. Right. Also, Asia is a strong low, comes with some kind of mitigation, and that's actually all right. Now we simply need to wait for a QM to form. So we got a strong high being made right here because price take out liquidity and broke structure. And we have a range. Now let's go onto multiple time frames. You see someone will see more clearly onto the 15 minutes seeing these three kind of formation, that one and the QM, and someone will see it much more clearly on the 5 minute, and even someone on the 1 minute. This is something personal because our eyes see things differently. So for someone will be much more easy the 15-minute point of view, and for someone else will be much more easy the 5-minute point of view, right? So do we have inter-range liquidity? If we tie up everything, we end up by having this inter-range liquidity. We have a lot of equal lows, and imagine how much liquidity is resting below all of these lows, right? Now, the closest PI we have is just this overall block right here, right? That will be a high time frame one lining up with the imbalance field price action, right? So you can actually scale that long in. I didn't take it personally, not because it was something low probable, but that PI was too big since it was, I think, something around 5 to 6 pip, if I don't get it wrong. So in this case it was 3.2, but I think I added some more pips from the slippage. So yeah, it was something like 4 pips. And in the overall, I thought the price might just want to push lower, going to mitigate the main OP, right? So I waited for a confirmation entry that will give me simply confluence. So if you drop down into the 1 minute, I waited for a QM to form, and now we have price taking out liquidity, block structure, and then price makes another strong high. Right now, inside of this range, do I have internal liquidity being built? Is either yes or no. You can't escape from it. You have to remember the strategy is meant to be simple and meant to be objective. Then anyone can actually customize it and personalize it by his own view of the market and what he basically likes. I don't have internal range liquidity, so any kind of equal highs, equal lows, or tree candle formation, this low fail to take out the high, and that simply is going to be inducement. Now, what is the closest PI I can find to it is simply this breaker block, right? That is lining up with the unmitigated wick. And that's where I actually executed. Now, 2 pips stop loss, I think it's something like 2.3 to actually add more slippage to it. And my actual target wasn't this high. No, yeah, was this high because it was already a 104, but you can actually exit somewhere above. I love personally safe targets because they're gonna give me an average a 104 and a 105, and I don't need to boost my ego to catch swing trades. Most of the time, I don't like to actually exit on the swing target, but back in time, I was used to when I was more focused on ping pong, and that will give you a lot of risk redeem, but also you need to have a better understanding of the market, so you're gonna need a lot of data to build your analysis. I know how to swing, I know how to do ping pong since I basically passed a challenge a few weeks ago, basically doing it, and that's not something I see myself doing a lot, and even right now, but it's something I can definitely obviously can teach. And that's something I also refine it to do it in the most high probable way. So my way of trading right now is something more chill, I should say. So just take a few sellers that just follow up your rules. You don't need to catch, let's say, 100 risk redeem to make some decent money. You can either catch a 105 with just a nice risk management plan. Right? So don't think you need a huge risk redeem to actually make some decent money off the market. It's all risk management based and all basically edge based. So you need an edge that is working for you and not just statistically, but also for your mental. Because for what I see and by why my experience is that trading is something mechanical. Is anything related to basically your mindset, your point of views, let's say how you feel, but it's something that will affect your actual edge, right? You have to actually take the strategy and make it work. It's something mechanical. It's just two QMs, T1 and T2, and go. It's just raw price action. It's just how we trade. It's an approach that is made to be easy. So don't think it's because you feel unmotivated. It's something because today isn't the day. That can be for a day, and that's all right. We all have good days and bad days. We are all humans, basically. So there are days when I simply don't feel to trade, and I can actually don't trade because I can make some easy mistakes and I cannot be on point when I do my analysis. So there are days that I simply skip to trade, right? And that's something you have to do too. Don't think you are forced to actually trade because that's not what it's meant for, right? So by the end of the day, it's just taking the strategy and applying it over and over and over. So that can be for your understanding of the strategy or for few concepts that you didn't get correctly. That's basically how it is. So don't think you lack motivation, etc. when you talk about yourself. It's just basically knowledge, and not knowledge because most of you even know more concepts than me, but it's just clarity. Because as you understood, my trading plan is simple. My trading game is so simple. It's not something, let's say, way too complicated. There are a lot of logic behind it. Yeah, of course, but it's made to be simple because I have to apply it every single day over and over. So I can't find myself doing something complicated for, let's say, 3 to 4 years, because obviously the actual factor of the thing being complicated will actually lower your percentage of applying correctly, because that's simply more complicated than something much more easy. Now, don't confuse easy and simple, because they are two words completely different. That can be simple, but not easy. That will be simply more easy for you when you have a better understanding. In the beginning, you find it hard to actually even think if a range has inter-range liquidity or not. And that's basically how it is. I struggle it a lot too. I was also a learner. I wasn't born, let's say, learning the strategy. I was also a learner as you, and that's why I made my own data and researches so you don't have to. I made my own edge to actually catch high probable setup and make the strategy simple, right? And that's why I keep trading so far, because I made it simple. I understand every logic so far with the strategy. And even right here in the market closure, you can just say where price came into and how. Your question is going to be, it came up straight and pretty much like nowhere, or let's say it came onto some liquidity and price checked it for a trap. So if price came out straight into it, that will simply be teacher as we covered today. So how to make it actually understandable? He will fail to take out the main low, of course, because he don't have a purpose in this case. And think about market makers. Let's think for a second that you're a market maker. If you have to induce all the people to go short to, let's say, something inside of fear, what you will do on this scenario? Your first answer is going to be, I will take out the low. So people will see it as a BOS and they will all get fished by just taking shorts. And yeah, that's how they make it. And that's why T1 and T2 and basically all the range strategy help us understand it in a much easier and simpler way. So you have your liquidity and you can find your POI somewhere below it. And if you are aware of it, you will see price reacting from a trap. That's for as is simply the inducement being made and catch some short. And easily you made ping pong. So don't think that ping pong is something hard. It's something hard just because it's more complex. But once you master this strategy, they will be very easy for you. You won't even thinking about doing ping pong, because most of you struggle by doing ping pong because you think I must do ping pong. So you find yourself in the most unrealistic scenarios just to understand the price going first down, up, down, and again up, where in the reality, it will go just straight down because you're overthinking, right? You have to take everything, and once you have a range, once you have a T1 and T2, you can take every single trade, counter trending or even pro trending, right? So I hope everything is clear for the T1 and T2. I'm also gonna do a little Q&A, so now you can all unmute yourself if you have some question, and I will be glad to answer it.
Hey Nico, can you hear me? Nico?
Oh, wait a sec, my headphones are not working. Try to try to speak.
Test, test.
All right, I hear you. I hear
All right, perfect. Do you mind if I share my screen, or do you want me to just show you on your screen?
you. Go ahead, share your screen.
Okay,
You should do it right now.
thank you.
All right, I see it.
Okay, can you see my chart?
Yeah,
Okay, perfect. So, from what you were talking about in the Zoom session, I think that you were saying that, like, for example, like, if you don't want to get trapped, you would, like, this is the major break here, but you wouldn't want to see this break, even though this is a three candle formation, and even this is a three candle formation.
yeah, you can, but obviously what is much more clean for your eyes, let's say only on this view, is this high, because that's a major high. This makes sense for you to hold on this time frame more than this high and this high, right? Because you can clearly see price taking a structure, coming into something, and then reversing. But let's say if you build a story and you go, let's say, on the second time frame, and you dig into this high, and even let's say now you're on the 1 minute, even to 5 seconds one right there, you can actually anticipate it. But yeah, for me, what I will wait for is simply this high to just, let's say, lower every risk I can have.
Okay. And then for your, like, if we were to take a short here, like we do have a QM right here,
Yeah,
but this would not be a high probable short unless it takes out, let's say, this one, because this is an area that took liquidity and broke structure, even though
yeah.
it's inside of this range. Would you
So,
agree with that?
so you will say that's a trap, or that's a zone to hold.
I'm saying this as if this doesn't hold, then this whole range will go. Is that like the correct
Yeah,
way of thinking? Okay.
yeah. Now, you have to think in this way. Let's say you wait for this breaker structure, right? That's the main one, but there are also gonna be a lower one. Now, on most of the time, you're gonna see the lower one. Let's say that this breaker structure made a pullback, retracement, take it and go. So you have some data, but sometimes what you're gonna see is just random pullbacks pretty much on nowhere. So let's say you have any of these three candle formation and you see just price making pullbacks. Now you can't think that all of this is liquidity because they won't make sense for the market just dropping, right? If there is no reason to make them, price will just go up straight. So there is a reason and you have to build the story behind. So if I see price making this retracement, I think there should be something I'm actually missing on this time frame because I can see both of the QMs. So that means I'm on a high time frame because we have to remember that a three candle formation, as we can see, is a high time frame point of view of a QM, right? So that means there are information and data we are missing, but we can simply just wait and see how the price acts onto these areas. Now price made a T1, but if you actually ask me what's the difference between catching a long right here and a long right here, there isn't any difference. I can tell you why this zone worked and this one didn't work. Because to me, there's simple two ranges with actually three candle formation pretty much based. There is no difference. To actually spot the difference, I should drop onto the seconds and question myself about this actual structure. Right.
Let me go to the
So even
seconds.
if you go, all right. Now, what do we see is that inside of this range, we won't find internal range liquidity. Price came and broke structure. Now, ask yourself also where price came after this BOS. It didn't even take out this high. So that's something weak. There is sense for price to just stopping right here. To me, actually, no. To me, price could just go straight just above it. Didn't make sense for me. And also,
Okay.
what you can consider is just this range don't have internal price block structure. That's T1. That's in a variation we covered. Now, can you go into the 15 seconds? That will be even more clear. All right, that's what I told about. So that's basically anything. And as you see, simply build up more liquidity above this PI. and that makes sense. Also, if you're able to it, so you can easily see the two QMs being made, and you have to question yourself, what did this low do inside of this range? Anything, right?
Right. It didn't do anything. It didn't even displace above this high, take
Yeah,
this high, so it's probably
it
gonna
didn't
fail
do
and take it.
actually anything. So you can't say that's protected. If you dig way too much, I don't like to go on to seconds most of the time because you can take bigger range, and if you drop way too low a time frame, you will find always a reason. But in this case, it's pretty much accurate going to seconds because you have to compare every scenario you go on. So can you go on to the 10 seconds or even something lower than the 10
Which one
seconds?
would you like? Five
Uh,
seconds?
let's try the 10 seconds.
All right, let me just hit replay real quick so that it doesn't
Yeah.
like 5 seconds.
All right.
This is where you were.
So, all right. Try to go the 10 seconds. Also can see this point of view.
No internal.
Yeah, there is no internal. And now, as you can see on the previous range, I was actually catching some informations. You have, let me actually redo it. So yeah, that's from here to here. You have a QM, you have a QM. Price made a 3 candle formation. That will be a low. So price made a low, made a high, a low, and another high. So that's basically T1 right there. And the closest PI right here. And inside of here, you don't have pretty much anything.
Right.
That's basically the main reason. Now, if you drop even onto the 1 second, you will find liquidity even down there. So there is no point to actually go to even lower time frame. That's why we
Right.
have to tie up everything. So if we tie up, let's say 10, 15, and 30, we end up pretty much with this only point of view of that weekend information. That's something I wouldn't do personally, because when I see data on this point of view only onto Forex, there can be some differences because we have brokers that gather us different data. But when you basically trade the actual indexes market and the future ones, you have only data that will be mainly downloaded by the actual Chicago. So you can basically mess with data because there is only one that is going to be downloaded for the actual center. So you
Okay.
can be more accurate on them, actually, on my
Okay.
point of view.
So in some of your charts that you're posting in the group, I see that like there is no internal range liquidity sweep, but you still call this a strong low. But
Yeah,
the
I
reason
call
why
them
I
strong highs or lows, both. Basically, I don't like to call them weak because they are both strong for me. But yeah, obviously one of them will get taken. So just my way of actually calling them.
okay, but do you call like let's just say you do. Let's say you did call this a strong low. Would you have called this a strong low because it mitigated more than 50% of this range?
No, personally, I don't use premium and discount a lot, but it's something some people like Solid to do. And because basically I like logic based some everything. Like if I can choose between something statistically, like let's say about the premium and discount, the premium and discount is made on a statistic. It's not something, let's say the 50% is made by the logic behind the market. Because let's say we have a range and there is liquidity resting only here. Price won't come to the 50%, but this will be a strong low because we made a QM and took out the internal when the 50% will be somewhere right here. So that should be all logic based to me. And
Okay,
for
so
me,
as
I
long
would
as
like
like
to see,
logically if it takes liquidity, then you're gonna call it a strong low.
yeah, I will prefer
Okay.
price taking out internal instead of inducement to be that actually value structural point.
And I'm sorry, I have one more question right
Yeah.
here. So me and some other guy in the group, we actually traded this right here. Let me put it on replay. So we saw this break and like we didn't I at least for me, I don't know about him, but I thought that it was personally gonna come down to this low because I mean even though like price took out internal range liquidity over here, I would have thought that like here's the opposite QMs
Yeah,
right
of course.
here, and then it just dropped right here again. and then there's like these two structural points. And then when you came on and talked, uh, maybe not this break right here, but like I'm sorry, maybe not this break right here, but you would have waited for this break, or even better, this break, to
Yeah,
say that
you
it would
could, but personally, can you give me a just let's say 15-minute point of view? All right, can you make it smaller? It'll be just to figure it out where we are on the
like,
actual
oh,
bigger
on the
picture.
bigger.
Yeah, the red line was your target.
Yes, it was.
All right, that's perfect like this. So we got price reacting from this obstacle right here. That's also an untested QM. So price build up some inducement. Now, all right, I got it. So price made this inducement to make the actual obstacle valid. Now we find ourselves previously inside this range right here because after every BOS we have a new range. We can't see even clearly internal range liquidity. So we must wait for some kind of inducement. Now price made his pullback. This is something that created, let's say, inducement and been feeding into a POI, and that can be a long. Then price broke structure, making a new high and a new low. Now, if this high, or let's say this line is going to be our target, I will consider, let's say, the overall high above here, because it's something much more clear for my eyes. Let's say that's the destination because we came from a high time frame PI. What we can do is just one makes sense for price to react either here because we are inside an obstacle and push way too many pips. Now, if price wanted to take out this low, and it will, because now build at simply equal lows will be in the future, right? Simply because I think we are reacting from somewhere down there, and then we can just move up. So can you go just to the 1 hour time frame? All right. Is
Do you want me
price
to show you what it reacted from or
yeah,
no?
yeah, that will be better. All right, we have an unmitigated wick. That's also 3 candle formation. Again, the weekly. Oh yeah, you can take just the POI on the monthly. It's just enough. Don't think to over refine it, because if you were, let's say, into the 1 minute, you will take, let's say, the whole big wick basically.
Okay.
So if you drop to the exactly the 4 hour, well, we can see, yeah, price came into something. Yeah.
You want me to go back out here?
No, that's pretty enough. Yeah, I already see a liquidity being built. So yeah, price build up more inducement right here to make the POI valid. And now the high following the trap should be weak. All right, got it. So yeah, price was inside this trap. And now will it make sense for price to even push way too lower? So let's say even coming down there, because we'll make everyone win. And that one is simply a small pullback that happened inside. And if price move pips below it, so let's say we'll take out your target, we'll simply make everyone winning on this area, right? Because all the people now don't want to go long, they all want to go short because they see that BOS. So if you saw it, you can actually catch the trade right here, because if you go, let's say, to the time frame you cut the entry, or basically you show me at first, I think that was the 5. Now you have a range right here. You will have exactly internal range liquidity being built. Now you wouldn't take, let's say, this PI, even if that can make sense, because for me is inside that can be liquidity, but there can be some kind of order flow being displayed. But as you can see, if price want to come even here and you see it as a PY because let's say you have a key level and things going, is too far away from the liquidity. And then a confluence for you would just see price keep pushing through it. building inducement, takes it, and then you go. And that makes sense for us.
Right.
So that will be a trade. That's something very low probable, not for the opportunity to go to the actual take profit, but just for the probabilities to just being tapped in. But yeah, that's something that makes sense. For me to actually switch my bias, I will wait for this high or something like this to just be more sure about it. But if you, let's say, have the PI, I will definitely take this one because I have confidence.
Right.
Try to go to the 1 minute inside. All right, yeah. I'll definitely take it if I have the PI because you see price taking a structure and even multiple ones right there forms a QM. You don't have internal, price builds some internal. You will personally catch it to, yeah, somewhere right here, and that can be a trade. And for the exact reason that all the people will be winning if prices drop too lower, you can assume that this structural point will be valid. So price breaks structure gains, let's say forms a QM, no internal, builds inducement, take it and actually go. So yeah, that's a lot of, let's say, low probable scenarios for the probabilities that they happen, but in the scenario they happen all. So yeah, you can trade it like in that way. So basically you don't have to do anything special because they're simply low probable. You will, the only way you can see them is basically on this way. So yeah, I'm
Okay,
just
so
surprised because they happen.
right. So you're kind of the higher quality setup for you would be to break something on the internal and of the internal of this range. So like from here to here, we got a range, and we just swept this high from this. We broke something here, and we also broke something here. Or I'm sorry, am I right or wrong?
No, you're right.
So we broke something here, and then you would be able to say, okay, I can pull the trigger here because
Yeah,
this high
exactly.
took this and took something in between here.
Yeah, exactly.
And this high right here did not take anything in here. Maybe on the seconds it did, but it doesn't matter. And it
Yeah,
took something
exactly.
like this from the internal. So you're not
Now,
going to take it. You'd rather wait for a break here.
this for me wouldn't be high probable because to me to be high probable, the low or the high that hold the range, they must take out internal insecurity because they can be a high time frame point of view of a T1, right? And if you, let's say you're missing some data, so you can easily get caught in the trap. So that's why I will never catch it this trade because I must prefer price taking out internal insecurity instead of inducement. But that's a personal preference. That's what I see tested and happen the most of the data over 6 and 7 months on my edge. But you can actually take them, there is anything wrong. Because that's
Right.
also based on how I feel when I take them.
Right. So
Yeah, they
right
definitely all
now,
make sense.
yeah, so right now, the reason why Price took this out and then failed was because it already completed like this range right here. So these are all weak, and we're eventually just going to get an opposite QM because here you would be confident in, let's say, since let's say this high took out this low and this low, that this area right here from here to here would be a good short because this high took out a low here and a low here. And the reason why these are not holding is because there's no like more internal liquidity on the H4 that we can keep breaking because this range is already like complete right here.
Yeah.
Okay. So perfect. I mean, you answered my question amazingly. So I appreciate you for your time.
Oh yeah, don't wait. Can you just remove the Ripple tool to see where we are in the actual market?
Yes. Or do you want me to? Okay, of course. Let me take you off replay.
All right,
Perfect.
yeah, exactly. That's exactly what I basically anticipated that happened. So yeah, that's what exactly I would expect for price to do.
And this high did not take out like a major low here, so you would have expected this to get taken, right?
Now it didn't do, never trade these pairs, so I don't have basically data of, let's say, the high time frame. So try to drop, let's say, to the daily. So for what I see, yeah, price made a high, made a low, took out something. Yeah, if you're bullish in the higher time frame, or let's say you came on a high time frame areas, this high will get taken. You're gonna get, for me, some kind of reaction, but don't expect, let's say, anything that will bring a price down there and go up. If you want to just break, it will. And for me, that's the main logical thing I will say.
And again, you would expect this to be the trap if it was bearish, but if this breaks, then you would expect the whole thing to go, right? Because
I don't
this
know
is
if
the
in a high time frame that's something, but yeah, I think yeah, that can be nice.
it's a weekly structure point.
Try to go to the monthly so I can get a better point of view. Or so yeah, definitely. Definitely it's
Yeah.
going to get taken.
And this did not take out a structure point, so it's gonna get taken here, like you said.
Yeah, for me right now what you're gonna see for me just this monthly high being taken for me.
Right.
That's kind of
Right.
what I see and what I will expect. So yeah. No, thanks for your video. It's pretty clear, but a bit complicated for alternative demand. Can you do a video about can I do a video about this in the future split sphere will be on continuation retracement until lower time frame is our higher time frame view in mind. Oh yeah, I can already explain. So let me actually
You want host back?
oh yeah, exactly. So
Okay.
and yeah. So yeah,
Let's see.
basically that's something so easy. I know you see it complicated about seeing the actual pullback and retracement even on the lower time frame, but you have to actually tie up structures. So let's say you do it even right now and you want to start training your eyes. So let's say your target is, let's make it easy, was this high right here. Now, you know your bias because your price took out a protected high. So for your high time frame point of view, so basically this 4 hour, you see, yeah, price should just go up, but it's not just gonna drop a single candle, right? You can't. Oh, you can see my chart.
Oh, hold on. I need to stop sharing, and
Oh
now
yeah,
you can share. I think you just, yeah, there you go.
oh yeah. Now you all see my chart.
Yes.
Oh yeah, perfect. So I was saying, let's try to take this breaker structure and let's say we are inside. We know that we are bullish because price took out protected high. So now we have a range, we have a low. So everything should go. Now we have our QMs. So now we simply gonna expect some bullish reaction. Now, on a very low probable, you're gonna take trades directly from this time frame. So I don't think you're gonna take this or even if it's nice because it's gonna give you a 105, but it's going to last, let's say, from Tuesday to even, let's say, the next Monday. So how you can deal with it is simply dropping down lower. Now think about the market structure before ranges. Now price should be ready to go to the external range liquidity on a bullish range in this case. So that will simply gonna create a bullish market structure. It's going simply to print higher highs and higher lows, right? So now if price broke out this high, we're gonna need simply our higher low to be protected. Now if you drop, you can also gonna see all these data. You'll get confused by all of these data because you're now not able to filter all these data. They're gonna be all equal for your eyes because you don't get them their purpose. How to get their purpose is just to actually build more and more and more in depth. So that will be simply dropping timeframes and actually understanding. But the main point of view is like if you catch always the, let's say, the switch between the actual phases, you're not gonna take trades if you only look them to a high time frame point of view. Because let's say you catch it, let's say right here, your switch will be made from here. I think also in the video use a the sample that will be even much more perfect. You can't catch, let's say, this trade, this trade, this trade, or even anything inside. You can be able because your BS is right here. If you tie up everything, Let's say you go to the 50-minute, that can be nice. It should be, yeah, right here. You can start yourself asking questions, like for example, where we are. We already took out some liquidity and we are on a breaker. Price took out the high, gets violated. So that's a valid breaker block. Now price is on a high time frame area. And let's say if price take out some structure, that for example, this three candle formation, you have confluence to anticipate price reversing, right? So that's all the confluence. Basically, you need to actually anticipate all of this shift and catch all of these trades. That's something, let's say, very low probable in this case. Let's say you have this, yeah, like this, and even these are simply lower time frame entries. Once you have your main reason, you just get all the confluence. And now you see it as intrinsic equity, but let's think if price is gonna make me go, yeah. You see how this should be protected if price want to just go bullish. So in the worst scenario possible, you anticipated a pullback, price is gonna create the teacher, and it's going to go. You don't have the confluence to actually pull the trigger right here. All right, let's just wait. Let's say price came up and took out a protected structural point because there is no reason for price if the target is up there to just drop. That will make your QM from here to here. You have internal and you have a PI. Execute, you have another breaker structure. Or let's say you waited for this one because your eyes will see the most this one. You have now a QM, QM, no internal, inducement as teacher, PI, execute. But more you wait, so more you hesitate, more you're gonna lose all of this opportunity. So right now in the phase you are, you have to balance basically your confidence and your confidence. You have to mix them, right? Because if you run and let's say you are overconfident and let's say you're gonna take this BOS all the time, sometimes price is just gonna go because you don't have a lot of experience and a lot of data of your own understanding of the strategy. But when you're gonna build more experience, and don't think that experience is knowledge, because you can, let's say, study the market for even 30 years straight and don't understanding anything. Right? You can just even don't know how a candle form, but you just say, oh, I studied the market for 6 years straight. Or just even studying the ranges, but in the wrong way. You say, oh, I studied the range for 6 years straight, but you don't even know how to mark up range. So don't compare experience with actual knowledge. I know a lot of traders that they just trade for 3 to 4 months and they just started with ranges and now they all, not all, but let's say 70-80% of them, they all manage a personal or a funded account. And I know some traders that they studied the market for 10 or over 15 years and they don't even know how to build, how to even calculate a lot size, for example. And that may sound crazy, but that's true. So do smart work. So basically, if you want to improve this point of view, you see me doing it easily because I train a lot and I took time to do my own research for price and expectation for what price might do. The easiest way you can actually train it is just, let's say you go to the 4 hour, or even let's talk about the diagram so you can actually understand the main logic and go to apply by yourself onto the chart. So let's say you select a structure. So first thing you need to do is having a structure. Don't go on the live market, either on the backtest, because they're gonna be useless. Take a chart like I did and build your data. So do some research on how the price behaves. Let's say you take the 15-minute one in red and you go to drop to the actual, let's say 5-minute in blue, and train yourself to see when the actual structure shift, right? To when the structure shift from the expansion phase to the retracement, right? Train yourself to seeing as much closely as you can. But don't just take random structural point, build a story. So make sure that they're all structural points that takes out internal equity or even inducement, and they must get respected. That will be an easy training when you have only 2 timeframes. So let's say you do only this work right here. The next step is going to just add a time frame. So let's say you start from the 1 hour, you drop 15 minutes, and then you do it on the 5. Now, the most, let's say, powerful way you're gonna use it is just actually use it from, let's say, this 1 hour range, and you just understand the 1 minute structure inside of here. You have a logical area, and you can pretty much take all the shorts still here, or even, let's say, where the area that price came. That's not important for now. But yeah, that should be a balance for confidence and confidence, right? So try to apply these actual rules. So take a time frame, that will be your high time frame, and drop, let's say, 2 timeframes will work the best. That will be your lower time frame that you're gonna simply gonna dig and fight with the actual market change. You have to train basically to spotting value structural point to just be broken. Right, that will work a lot because it helped me. And that's why I can actually tell you guys some advices to how to learn better, because I struggle a lot with this strategy, because all the issue you're asking me, I got the same, and they were, let's say, more huge than yours. And I fix it. So I'm not, let's say, the most intelligent person. I'm not perfect, but I simply learn it. And the thing I can say if you're trying to learn is just make it much more simple, because all of you, all the people that did a call with me with the 101 or even the mentorship program, at the end of the call, you all say to me, I was making harder things than they really are. And I know it's a common issue because I was making it too, because we all think trading is hard, because 98% of people fails or even more. So that should be something complicated. And then you see me being profitable, managing a prop firm. You think, oh, I might should do something much more easier, and Nico should do something complicated. But in reality, is a completely opposite, right? So what you take when you're in a trade, do you take partial profit? Personally, no, I'm not a huge fan of partials, but when you actually want to take a partial, what I will do personally is, let's say you have your range, your safe target will be when you want to take a partial, or at least pay yourself. Now, don't pay yourself, so take a partial if you have a 1-3, because it's going to kill your risk redeem basically. There is no sense for actually take a partial 1-3 and leave the trade running, let's say, for even multiple days, because even if it comes to, let's say, a 1-50, you're gonna take, let's say, even a 1-5 in reality. So it's basically ego based to me. Like most of the people you see on social medias holding, let's say, crazy trades, most of them, they all took 90% of the trade right there and leave, let's say, 0.1 lots running. So don't get fooled by all these random traders that they don't even live the market every single day. So what I will do, if you have a 1-5 and price is right here, you can bank up something. Now, I will personally bank a 25% for this simple math, because if you're gonna multiply your 25% for 5, so simply do 5 for 25, you will have something more than 100, right? So the 100 will simply be your one risk redeem. So basically, you banked, you covered for a future loss, basically, right? Because you took a partial and you went up something like plus one something RR, and you will cover yourself if you're in the next trade while this one is running for a potential loss. So you pretty much made up some profit and you protected your capital, and then leave the rest running until your overall capital. Don't take a lot of partial. Like I don't like to do it by myself because I prefer exiting a 1-5. A 1-5 is more than enough if you want to make decent money in the market and if you have obviously a risk management plan. I will also gonna show you how I build my own risk management plan and more in depth on my edge on the next live calls. But basically what I will do when I manage a trade is just exit full position to the safe target if I have a 105, or let's say a high probable 104. But yeah, don't take a lot of partial basically. So yeah, what target risk redeem you go for the week? I don't have a actual target about risk redeem simply because I don't think every single day I go to the chart to just say, oh, today I went to catch this amount of risk redeem, this amount of pips, or whatever you're gonna call them. Like on a real scenario, like for example, this split I just got this week, I took, I think, yeah, that was 4 trades. It's basically, so on a 21 days period with this prop firm, so not 14, with just 4 trades that were basically one real trade and basically 3 others to fulfill the actual trading days. So what I did is just I need to catch a high probable trade for the whole split because it's gonna give me enough money to just be, let's say, calm for the upcoming week. And that's basically it. I don't need just to chase price. And even when I was used to do ping pong, that will be basically catching multiple trades every single day, didn't have, let's say, a target for RR because it's not something I can control. Like I can control if a POI is going to be big or is going to be small. It's not on my hand. I can even control if the price is going to tap my entries or just react to the traps. It's not on me. So that's why I can't have any kind of target about risk redeem, profit, pips, etc. I can just execute the strategy and just collect at the end of the week and see like an average of what I get. But don't make yourself thinking that you should catch a 105 every single day. That will be a lot nice. I can't deny it because you will end up making a lot of money if you're running even a prop firm or a personal account. But it's not something that will happen a lot if you have your edge, right? Because I prefer you make you think about every single setup before taking it. You just catch high probable setup and just don't chase the price. Because if you put your mind in a state where you have to chase a 105, so you wake up every single morning during London or New York, and you just say, oh, I should catch a 105, your mind will be focused of catching trades instead of actually applying the strategy. My fear when I trade every single day is not to lose money. I know I will catch some losses. There isn't a strategy that is 100% win rate, right? This one is very accurate. It's something like 90% or even more if you work, let's say, at the best performance out of it. But I know some losses will happen. So I don't have fear of the loss. I have all my faith and all my knowledge made by this strategy. And then it works. We all see it today constantly working. So I don't have fear of this strategy. The only fear is on me. I have the fear of applying the strategy wrong. I know losses will come by also my mistakes because I'm not perfect. I'm not having a 90% win ratio right now. I have something like between 70, 75, so something like that in this period. My only fear is to apply the strategy wrong because that will be a mistake. It's something I wasn't supposed to do. But market wasn't supposed to come to my entry. Market is supposed to do whatever he wants. The only thing I can control is where to place an entry and using much more logic as I can to apply the strategy correctly. And I want also to transmit that all of you should be thinking in this way. Don't, let's say, focus on money, risk redeem, pips, etc. Your focus it should be today, tomorrow I will wake up and I want to apply the strategy as much correct as possible. If I do it correctly, the strategy is working, is a winning strategy, I will end up in profit most of the time. Don't think it's something that will happen the next day you will cap because it's going to take time because that will be based off your understanding of the strategy and on the market. But in the long run, and even today, you should be focusing on simply studying the strategy and make that work because that's all it is, right? Do you only take trade in New York in the New York market? Sometimes I feel I have a result trade in London than you. Now, for the time zone I live, like London starts between 8, 9 a.m. So I basically wake up this time. New York starts at 2 p.m. and ends up 5. So I can be considered lucky for where I live because I can basically trade the whole day. But if I have to choose which one I would like the most, on me personally, I will prefer London for this setup. But I know a lot of traders that also live on the same time shift, or even let's say they are very nice to trade actually every session is very personal. It's very personal choice. Like there isn't the best session. I also know traders that trades only Asia or using ranges, and they all profitable. Like I will personally then do it because Asia happens during, let's say, after my midnight. So I wouldn't trade personally after have trade for the whole day. But yeah, you can trade basically every session that you want. Sessions are something that exists for me in our minds. They are not real in the chart. We study behavior that they happen so frequently on specific timings. Yeah, they happen. But there is no the right or wrong timing because as you all understood, there are a lot of different timings for sessions, etc. It's just simply statistic for me. So yeah, the market is always the same. It only acts certain behavior on specific timings, and we are all aware of it. And that's why we implemented session in our strategy. They are not a core fundamental because basically we can trade Asia, London, New York, and even between this session with just ranges because ranges works basically. So yeah, that's all for this call. I enjoyed a lot. So the, the next calls they're gonna be made are gonna be made by the other two mentors. They're gonna be Arsh and Abel. So we are also happy about this major update in the community. We're also gonna bring a lot of content to all of you. This is just the beginning. So have a great time and take care, guys.